What's up, guys? Today, we're breaking down something that almost every retail trader is overlooking. Not because the information is hidden, but because most people are too distracted by fear, red candles, and endless noise to see what's happening right in front of them. While the average trader is doom-scrolling through social media, convinced the market is collapsing, the data tells an entirely different story. And if you're not paying attention, you're going to miss what the smartest players in this space are already preparing for. So let's dive deep, not into rumors, not into hype, but into real numbers, real accumulation, and the real technological direction behind Kaspa. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Retail sentiment is shaky, emotions are high, and short-term panic is dominating the conversation. But here's the thing. Numbers don't panic, numbers don't exaggerate, and numbers don't lie. Right now, a publicly traded company on the NASDAQ holds 235 million CAS. Let that sink in. This isn't an anonymous whale, not a shadowy fund, not a random early miner. This is a regulated, publicly listed corporation making large-scale, traceable acquisitions. Their average entry price? 14 cents per CAS. That means institutions, the same groups that typically move last, have entered the game early. And they've entered with size. They're not experimenting, they're allocating, and they're not alone. One of the largest Kaspa wallets, known as wallet number 1, has been on a buying spree. In just the first half of November, this wallet scooped up an additional 2.7 million CAS, bringing its monthly accumulation to over 43.5 million CAS. Pause for a moment and think about what that means. While retail traders are obsessing over dips, debating whether the price will fall another 2%, and hesitating because the charts look uncertain, this whale is aggressively building a position the size of an entire mid-cap portfolio. And then there's wallet number 7, another major holder that refuses to slow down. It recently added 2.6 million CAS, pushing its total to a staggering 339 million CAS. That's not a casual buy. That's long-term belief expressed through massive capital commitment. These movements aren't coincidences. They form a pattern we've seen over and over in crypto history. While inexperienced traders lose confidence because the price isn't moving fast enough, large players accumulate quietly during boring or uncertain phases. They know markets reward patience and preparation far more than emotion. And the reason whales are confident is simple. Let's talk technology, because this is where the real story begins. Kaspa's architecture solves issues even Bitcoin struggles with. In the real world, speed matters, instant settlement matters. Security matters, scalability matters, and Kaspa manages to deliver all of these simultaneously. Traditional financial systems are slow because they rely on layers of middlemen. Banks, processors, verification systems, manual approval processes, everything is permissioned. Everything is conditional. Everything depends on centralized authority. You don't fully own your money, you're renting access to it. Kaspa flips that concept completely. Its proof-of-work blockchain allows direct peer-to-peer transactions, without banking hours, without delays, and without anyone deciding whether you're allowed to move your own funds. A well-known analyst recently pointed out that Kaspa's technology isn't just fast. It's structured in a way that can scale alongside real-world payment systems. We're talking throughput that can theoretically challenge Visa or MasterCard while keeping decentralization intact. That's the key difference. Many fast blockchains sacrifice decentralization. Others sacrifice security. Kaspa sacrifices neither. This opens doors for practical integrations, not hypothetical roadmaps, but actual use cases. One concept gaining traction is the possibility of Kaspa powering stablecoin payments. Integrating something like USDC onto Kaspa's extremely efficient settlement layer would create a bridge between everyday commerce and decentralized infrastructure. Imagine using a digital wallet built on Kaspa's backbone to pay online or in-store directly. No banks, no payment processors, no delays, no frozen transactions. Some blockchain networks have implemented tools allowing authorities or node operators to freeze or lock tokens. Kaspa does not. Kaspa is non-custodial by design. That means your tokens respond only to your private keys, not to a governing body or admin panel. This brings Kaspa back to crypto's original vision, But even with perfect technology, adoption is what determines whether a project becomes a global standard or fades into obscurity. That's where the long game comes in. Developers need to keep building. Businesses need to recognize the advantages. Users need to understand why self-custody matters. And wallets, infrastructure, and integrations must continue growing. The analysts watching Kaspa closely agree on one point. The fundamentals are solid, the performance is scalable, and the decentralization is genuine. Combine this with increasing institutional interest, and you get a project quietly shifting from underdog to serious contender. The price doesn't reflect the future. It reflects the present. Whales aren't buying today because of what Kaspa is right now. They're buying today because of what Kaspa could become. And this brings us right back to the accumulation story. Whales aren't guessing. Institutions aren't speculating. Big holders aren't acting emotionally. They're stacking Kaspa in size during a period where most retail traders feel unsure or bearish. They see something that isn't obvious to the casual observer. Kaspa might or might not become the blockchain that finally provides a real alternative to the traditional banking system. But the groundwork is being laid right now, quietly, consistently, strategically. And if you only follow fear, noise, and short-term volatility, you'll miss what the smart money already understands. As retail traders panic and focus on daily price swings, institutional investors and major whales are accumulating millions of CAS tokens every week. Their behavior shows confidence, not in today's price, but in Kaspa's long-term potential. Kaspa's real advantage isn't hype, it's technology. Fast settlement, robust security, proven decentralization, and the potential to support real-world payments at massive scale. While retail focuses on noise, smart money is positioning early. Whether Kaspa becomes a new financial alternative remains to be seen, but one thing is clear. The foundation is being built during a moment when almost no one is watching. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.